Well, hello guys, and welcome back to another video. Now, in today's video, we're going to be doing something a little bit different to what we would usually do. Most of you will know I don't typically talk about money or monetary figures and that kind of thing on the channel. I just don't know how helpful it really is. But in this video, we're going to talk about a recent trade that I had on silver. It was the first trade I had of 2023, and it was one of the best / biggest trades I've had over the last 12-month period. And so I thought it'd be kind of cool to talk about, especially focusing on the funded accounts that I traded this on. So I took a short on silver pretty much at the start of January, and a few days later it hit take profit for a cumulative total on my funded accounts of $15,000 profit.
Impressive. Very nice.
Now, I'm not taking into account the profit that I've made on my personal accounts and that kind of thing. We're only going to look at the 3 funded accounts I'm currently trading. So what I plan to do in this video is to show you, first of all, the trade on TradingView, give you a walkthrough of the analysis and my thinking behind the trade. Hopefully you can learn something from that. And then we'll jump over onto the actual funded account dashboards and we'll look through the trade statements for that trade on each of those accounts. So I traded it on my FX2 account, which I done a review of last Friday, so you can check that out. I'll leave a little annotation for that somewhere. I also traded it on my first class Forex funds account, and I traded it on my FTMO funded account as well. Now, I'm also going to talk a little bit about my approach towards withdrawals and actually taking profit from funded accounts this year, what my kind of game plan is, because I don't think I've ever spoken about what I do with funded accounts versus what I do with my personal account. So we're going to get a little bit into that in this video. So first, I'm just going to give you a pretty simple rundown of the trade idea itself. Of course, everything I trade is purely based on statistics. Just open up here my testing. We can see that over a 7-year period, the strategy that I'm going to be showing you here produces this equity curve, which you can see in blue. Now, the particular entry that I'm looking for on this trade idea here is this entry here, which I can see only has a strike rate of 38%. However, it has returned 80R, which on my risk, 2% risk, is 160%. Over just 320 trades practically. So we're looking at around about 0.5% returned per trade, which is actually very, very good. Now, I could go into all of the statistics that I have in these sheets, you know, all of the information that I have on these strategies, but you know, I don't want to bore you in this video. Now, effectively what we have in this market here is a little bit of a range, which is from this high here to this low down here. And effectively the buyers have tried to pop this up through the top of the range, and there's just not been any success in that breakout. So dropping down onto the 60-minute here, effectively the first thing I'm looking for is a point at which the market can retrace into for me to get a cheaper trade, right? I believe the market's going to sell off to the downside. So I could just hit it at market short with a stop beyond the fake out of this range, looking for price to come down and tag the bottom of the range. But that's not what I want to do. I want to get in on a retracement. Now, what I showed you in the Excel spreadsheet just then was 7 years of testing. I won't get into all the specifics of exactly how we do it and that kind of thing. But effectively, my entry was from this reference point here. My stop loss was above the high of the candle there. And then I was looking for a run on the bottom of this range, like so. So effectively, I'm looking for that retracement and then a sell off to the downside. Now, as we enter the coming trading sessions, I obviously get filled on that. We do experience a bit of adverse excursion there. In fact, we have a 24.5 tick stop, and the market goes 15 ticks against me. So in total, we see about 62% adverse excursion on this trade before it does then turn in our favor. And if I just play through here, you'll see the market does thrash around a little bit. I don't scale out of trades, I do trail stops, but we won't get into the specifics of that just now. You'll see over the coming 2 trading sessions, the market slams that target there for a 3.77R. So on my personal account, this was a 15% gain. On other accounts, I'm risking 2%, so it was around about a 7% gain. So that's the trade idea. Now let's take a look at the funded accounts. Starting off here with my FX2 account, you can see the equity curves just going up and down over the past however many weeks, and then we do see that nice big spike up, which we can attribute to, if I go into trade history, where are we? Which can be attributed to this trade in here, right, which made us $3.4K, again shorting silver. So we sold silver, we made 3.4K on that trade. Now next up, we have my FTMO funded account. Now you can see this account's in a little bit of drawdown here. Been in drawdown for a couple of months, just kind of back and forward, came pretty close on this account. And then we had that nice silver trade there, which brought us back quite nicely. And if I jump down onto the trade history, you can see here, it's this trade in here. So £2,300 works out to be 2.8K in dollars. So we're already looking at 3.4K here, 2.8K on this trade here. So you're already looking at 6.2K. And then finally, we have my first class Forex funds account, which again, you can see is a 200K funded account. And scrolling down here, you can see it's a relatively new account. Profit factor there sitting at 3.54. Interestingly enough, win rate is 33%, and yet we are pretty significantly in profit on the account. And we see this trade right in here, $8,400 there. So in total, across the 3 accounts, in a dollar value, we made about £14,600. Now, of that $14,600, so far I have withdrawn $2,500, which works out to be about £2,000. That's just from my FX2 account. I withdrew that pretty much straight away, and that's just going to pay for my rent and that kind of thing. And then first class Forex funds, as we get towards the end of this month, I'm going to probably put in a withdrawal there for $4,000 or $5,000 as well. Now, my approach to these funded accounts is effectively to use them as a cash cow. I don't have any desire in keeping money in funded accounts other than a small buffer in the FX2 account due to the trailing drawdown. My approach to these funded accounts is literally just to use them to withdraw profits on a monthly basis. With my personal account, basically what I'm doing is not withdrawing at all. I may withdraw quarterly in future, but at the moment I'm not withdrawing a single penny from my personal accounts. Obviously on my personal account, I am risking 4%. The desire there is to grow my own personal capital as much as possible over this coming year, and use funded accounts to do that as well. Take profits from my funded accounts. Some of that will be reinvested into my personal accounts. The rest will go into living and of course money aside for taxes and that kind of thing as well, which sucks, but you got to pay them. But yeah guys, that's a little breakdown of that $15,000 trade that I had on silver at the start of this year. So guys, that's going to wrap it up for today's video. I hope you did get some value from it, especially that analysis side of things. Something I want to emphasize is, regardless of what account size you trade, regardless of how much money you're making from trading or not making from trading, having a good, consistent and data-backed trade process is ultimately the most essential thing you can have in your trading. It's all good and well being able to hit profitable trades from time to time, but the objective in trading is not to hit home runs, every time, or hit home runs even once a month. The objective in trading is to be profitable, not every time, but rather over time. We want to be profitable over the next quarter, over the next year. All the sort of weeks and months and days in between that, we really ought not to be worrying about. And I understand that can be very, very difficult for traders who do not have a very measured and calculated, data-driven trade process. What we teach at KB Trading is data and evidence-backed trading systems. So I trade a statistical price action edge. I have an edge in the markets based on price action and technical principles, which has been thoroughly tested, refined, and optimized using our strategy and edge development process that we teach here at KB. The objective of this approach is to produce a robust trading system that will perform across almost all market conditions, meaning you can rely on it to generate you a consistent income from the markets. In our estimation, having a discretionary system where you trade based on how you think a market looks or how you feel about a trade idea is really not an optimal way to generate a consistent income from the markets. Now, if you'd like to hear a little bit more about our strategies and systems and the way we teach people, I'm going to leave a link at the top of the description to a preview page for our price action concepts course. Now, this course is not publicly available yet. We've only released it for KB members, but that link's going to take you to a preview page where you can watch me give a video walkthrough of the course and everything we teach in it. And you'll also find out all of the things that it includes as well. But that's all from me for today, guys. Any questions, drop them down below and I'll try and get back to you as soon as possible. If you did enjoy this video, please do drop it a like and consider subscribing if you haven't already. And I'll catch you in the next one.